will Bitcoin prices head next? Market Questions is the FT's guide to the week ahead. Where will cryptocurrency prices head next? Last week was a testing time for cryptocurrencies such as Bitcoin. Prices were already wobbling as the week began, after Tesla chief executive Elon Musk, a substantial advocate of the tokens and champion for the market's online fans, reversed plans to accept Bitcoin as payment for his electric vehicles. But prices dropped by as much as 30% in the middle of the week after the People's Bank of China issued a warning to the country's financial institutions against using the digital currencies for payments, a message it reiterated just a few days later. Chinese authorities have also launched a crackdown on Bitcoin mining, the process whereby computers unlock the coins, adding to the sense that global regulators are tightening the grip on this lightly supervised industry. U.S. tax and monetary authorities, including Federal Reserve Chair Jay Powell, also hinted at crackdowns. Broader stock and bond markets have shown some sensitivity to Bitcoin's movements in recent days, suggesting that, on the margins, Bitcoin's path from here could move wider markets. Where that path is heading is less clear. Last week's rout in the price of Bitcoin and other cryptocurrencies reversed only when Musk tweeted his support for the asset class and indicated that Tesla did not intend to sell its holdings. Musk's famously unpredictable online messaging means it is tough to predict what happens next in this increasingly tense market. It may seem in some quarters that Jay Powell and his colleagues may be somewhat subordinate to Elon Musk as the true king of central banking, with markets seemingly happy to move according to his command, said Mark Dowding, Chief Investment Officer at Blue Bay Asset Management. Hopefully it doesn't all end in tears for Musk and his followers, Dowding added. Katie Martin. How long can the gold recovery last? Gold prices hit their highest level in 4 months on May 19 on rising fears over inflation and a softer dollar, as well as a sharp fall in the price of Bitcoin. The metal has been on the ascent since it struck its lowest level in more than 8 months at $1,707 a troy ounce in early March when signs of a global economic recovery dented its appeal. On Wednesday, it touched $1,887 a troy ounce, a 4-month high, dipping only slightly by Friday to $1,878. Its path from here hinges, like so many other parts of the financial markets, on the outlook for growth and inflation. Typically, investors treat gold as a hedge against inflation, so a pickup in consumer prices should be supportive, and U.S. consumer prices rose at their fastest pace since 2008 last month. Balancing that out, though, is the fact that vibrant global growth tends to dent appeal for the haven metal. Carsten Menk, an analyst at Julius Baer, said the impact on gold from the latest inflation-stirring wave of U.S. government stimulus is mixed. As we project a recovery of global growth, we see downside rather than upside for gold and silver prices, even though inflation may overshoot in the short term, Menk added. Capital Economics concurred, saying it expected gold to end the year at $1,600 an ounce. Henry Sanderson. Where will Bitcoin prices head next?